Hi, everyone. This is Mike Wilkerson. I am the founder of Stormwell Advisors, the host of Stormwell.com, and the author of the book, Why America Matters. Coming to you today to talk about the sanctions regime. And this is based on an article I wrote for American Greatness a few weeks ago. And I asked the basic question, 1 year later, are sanctions against Russia working? So if we go back and we look at a year ago, following the launch of the special military operation in February of 2022, President Biden and European Union leaders confidently asserted that Western sanctions would bring the Russian economy to its knees. A primary stated objective of sanctions was to cut off revenue to the Russian government from sale of natural gas, crude oil, coal, related energy products into Europe. And while the West mercifully declined to impose sanctions on food and agricultural products, U.S.-controlled banking and financial system blockades on payments to Russia meant that food insecure countries in Africa and elsewhere would struggle with how to pay for them. So I wrote in American Greatness in June of 2022 and suggested that Russia would likely successfully navigate the economic sanctions, which I asserted would instead largely boomerang on Europe and the West. And I argued that in addition to hurting the economies of the European Union member states more than Russia's, by banishing Russia from the West, we would inadvertently strengthen China's influence over Russia while accelerating the process of de-dollarization and the establishment of an alternative global financial system, none of which would be in the US's long-term strategic interest. So following announcements of the sanctions, the Russian stock market fell precipitously, as did the ruble against the dollar. The World Bank described U.S.-led sanctions against Russia as the largest coordinated economic sanctions ever imposed on a country, predicting that Russia's economy would be hit very hard with a deep recession looming in 2022. Western businesses were told to get out of Russia, never mind that they're still operating in China despite the continuation of what has officially been determined by the U.S. and the West to be a genocide. Many U.S. and European companies dutifully obeyed and announced plans to leave the Russian market altogether. Some chose to scale back operations and some chose to stay, but business seemed to carry on as usual for many of them. So now, 1 year later, what do we know? How have the sanctions impacted Russia? So most of the newly released economic data for the year ending 2022 largely indicates that while Russia was negatively affected, the effects of sanctions have been much less impactful than predicted. Given that someone in the ether appears to be blocking access by U.S. persons to Rosstat, Russia's official government statistical service, some of this data has been difficult to come by. But the most basic question is economic growth. Russia's GDP contracted in 2022, but by 2.1% on their first estimate. Russia's government had warned in mid-2022 of a 12% potential decline in 2022 GDP, in line with the World Bank's estimate of 11.2% contraction. But then something remarkable happened in that for nearly every barrel of oil or ton of coal or cubic meter of gas that the West rejected, buyers in China, India, and elsewhere took them up, minimizing the impact on Russia's economy. So for good measure, Russia insisted that their fuel stock be paid for in rubles, which the acquiring nations agreed to, which had the effect of driving the ruble, which had fallen by 45% in February 2022, well above pre-invasion heights. And the ruble ended 2022 as the best performing currency against the US dollar among the top trading pairs. Now, away from that, rather than decreasing as planned, Russian exports actually increased, growing from 9.3% to 12.8% of GDP, largely as a result of fuel and energy prices rising substantially over the period. Imports were down some 18%, yet exports reached a record $532 billion, and the trade surplus, meaning more exports than imports, hit a record high of $316 billion, which was clearly not the outcome that the sanctioning leaders of the West had expected. So a new round of sanctions, along with price caps on oil, were imposed in late 2020, impacting about 51% of Russian crude and 64% of all their oil products. Yet so far in 2023, oil export volumes remain high, despite these newly imposed sanctions and price cap mechanisms. A February 2023 study on the impact of sanctions confirms what we already increasingly saw as evident, which is that Russia is redirecting its crude and thereby maintaining overall volumes at near normal levels. while Russia is selling at a discount, it's a relatively small discount, such that the revenue impact may not be as severe on the national budget at current volumes. And the study also points out that many of the sanctioning countries are buying remarketed Russian oil from markets outside of Russia. So according to the authors, the best that the West can do is to improve the situation is to focus on enforcement and lower price caps further. Great idea, but noting that many of these sanctions have only recently been implemented. You can put price caps wherever you want, but if there's a market for the product elsewhere, they really don't have much sticking power. Now, just looking at another aspect of the Russian economy, the value of the stock market is down substantially since the end of 2021. Foreign investors from the US and parts of Europe were forced to divest their holdings under the sanctions regime. The MOEX Russia index, the market cap of Russia's largest companies, is down 41% in local currency terms for the year end 2021 through February 2023. The remaining non-sanctions aligned foreign investors have fared only slightly better, benefiting from the rise of the ruble, as the U.S. dollar-denominated index of the same Russian companies, RTS, is down a mere 34% over the same period. Now, it's interesting that according to the Bank of Russia's data, volumes for equities and derivatives collapsed some 75 and 90% respectively in 2022. So these markets essentially shut down. On the other hand, Russia's bondholders fared very well, with the aggregate bond index up nearly 10% in local currency terms as interest rates fell from early 2022, but actually to below 2021 levels on the strength of the ruble and otherwise. So we see that bond volumes were up 26%, investment units up 44% respectively, which made up some of the lost ground in equities. Given the bond market is 10 times the size of the equity market, the wealth effect here is significant. Now, going back to the trading aspects of the economy, the European Union nations appear to be adhering to Russia's demands for payment in rubles. So euro to ruble trading volume on the Moscow exchange was up 47% year over year. And in order to accommodate foreign payment in rubles, and of course, to finance the destructive spending required of its war, Russia increased its money supply by nearly a quarter, 24% over the course of 2022. And banking sector total assets increased by 16% as the money supply grew to keep up with this. So look here for a read through to future inflation. I don't think that's the end of it, and a weakness in the ruble going forward, reacting to that overshooting last year. This is likely to be long-term defeating for Russia, just as it was in the US, by the way, for the Johnson administration during the Vietnam War. Now, there were a lot of predictions from the World Bank and others that Russia's inflation would get out of control. The World Bank predicted 22% for 2022. It turns out the official rate was 11.9%. That was only slightly above rates seen across Europe, where the numbers were 10, 11% across the EU zone. And now the Bank of Russia is forecasting a return to 5 to 7% inflation for 2023, tempering that optimism, admittedly, by acknowledging the pro-inflation risk from the labor market, meaning that they don't have enough people to fill jobs, especially in highly skilled positions and technical roles, and that real wages may not keep up. It's a problem we're facing here in the US as well. Now, in the meantime, Russia has been moving forward on alternative financial and payment systems to countries including China, India, Turkey, South Africa, many others, to circumvent the US dollar's cross-border payment monopoly through the SWIFT network. Now, put simply, all this means is the Russian government is finding ways to give and make payments in currencies other than the US dollar through US banks that have sanctioned their banks. So, and at the same time, they're working in practical terms to strengthen the commercial, trade, economic, diplomatic, all the other relationship forms that are necessary for cooperation and trade with these other countries, China, of course, being in the lead, but certainly not with them. It is pretty clear this is becoming increasingly an anti-American alliance. This is intentionally designed to undermine and circumvent the sanctions regime. And I believe that the United States has brought this upon itself by weaponizing the US dollar and turning it into a cudgel against not just Russia, but any country that doesn't get in line, which you can understand why it was done, but it's very long-term defeating. So in summary, I just wrap this up to say it does appear that sanctions are not having the effect that the West has desired. As painful as they might be to either ordinary Russians or to the government itself, they're not meeting the U.S. broader strategic objectives, which, as has been stated time and time again, appear to be both destabilization of the Russian economy, stimulation of social unrest, but importantly, ultimately, regime change. Having said that, an independent poll shows that the Russian support of the war has gone up from 71% last year to 7.5% in February of 2023. And at the same time, the government, at least for the moment, the Russian government remains adequately financed and likely to see some modest growth in GDP in 2023. Now, since many of these sanctions only became fully effective at the end of 2022, it may be too early to reach a definitive conclusion. But for the moment, I think it's fair to say that economic sanctions are doing what they always do. They're giving leaders in the West a lot of virtue signaling opportunities, public relations moments, but with little tangible result. There is a follow-up to this video that you can find here on YouTube. It talks about have sanctions boomeranged on the West. So this talk, as you've heard, really talked about the impact of sanctions in the world economy. That video, which we'll include the link for here, talks about the effect that sanctions are having on the U.S. and the West and what I call a sanctions boomerang. I think the punchline there is this process is really undermining the U.S. dollar-denominated global financial system, and it's inadvertently pushing Russia, which could have been a potential U.S. ally or at least a neutral in a conflict with China, into the very hands of our most formidable potential adversary, which is, I think, sheer folly over the long run. I hope you've enjoyed this and got something out of it. Please do like it, share it, and subscribe to my YouTube channel. And you can find out more about this and all sorts of other writings and materials at any time on my website, stormwall.com. I hope this has been helpful and look forward to seeing you next time.